Good afternoon, guys, and what a bloodbath in the market today. Nifty at 23,150, Sensex at 74,500. We have Mr. Arjit Garg, a SEBI registered research analyst, to help us decode about market today. Arjit, so how is the market going? How is Nifty? It fell so much today.
Thank you for having me, Ripradaman. And today's market, I would like to call it an absolute bloodbath. There was not a single stock. Okay, there were a couple of stocks that were in green today, but not because of the usual movement. They were not up because my people saw opportunity in these stocks. They were up because there was a gap up because of some certain news in that stock. Apart from that, all the other major sectors, major stocks, everything in red. We saw at least 2% fall in almost all the stocks in the market. Broader markets, as you mentioned, Nifty closed at 23,151 with a loss of 2%. Sensex at below 75,000 at 74,500 with a loss of almost 2%. So I believe this is a bloodbath market which we are seeing today. And most importantly, the levels that we talked about 23,300, 23,850. In the last session, Nifty was close to 23,850. Today, we decisively broke 23,300. Now, the reason why I gave 23,300, and I've been talking about this from past 1 week, the entire week we discussed 23,300 is the lower level. The market should reverse it, market should respect it. The reason why we were talking about it so much was because of the option interest and the open interest in the option chain, as we can see here. 23,300. This is today's Nifty's option chain for the next expiry, 17th March. Now, of course, the OI data has changed a lot, but for the entire week, we saw a huge open interest at the 23,300 strike price, both in calls as well as puts. Right now, we can see that at 23,300, the put OI is negative. So let me just get it clear for all of the viewers. OI means all of the open contracts that we have at that particular strike price for that particular option. Open contracts matlab people, we usually assume it that people are selling that particular option, be it call, be it put, be it futures, be it anything. If you have open interest, matlab people have selling positions active there. So if you see negative OI indicates that okay, people are closing down their short positions, they are closing their any open positions, and they are now purchasing that particular option. So if we see that put option has negative OI, this means people are buying that put option. Earlier, this was positive. That is why we were talking about 23,000 for the entire week, because we thought that 23,300 would give us an opportunity. It would give us an opportunity to buy a sense of relief for all of the traders. Now that it has been broken, now we'll look at the next support that we have. The next support is either 23,000 or 23,100. So here's a quick open interest analysis chart that we have here. Here we can see, we talked about this yesterday as well. The red candles tell you the open interest in the put side, and the green candles so show you the open interest in call side. Here you can see on 23,000, there are a lot of the highest OI for put option is 1,09,000 contracts. We just talked about OI. OI matlab people are selling that particular option. 23,000 pay, put pay. If people are selling that option, matlab people want that from 23,000 boss, we need a good up move now. So what can happen in the next upcoming session? Market might come down till 23,000. If I can just draw it down here on the charts, market might come down to 23,000. And from here, we can see an up move maybe of at least 50 to 100 points. So we can see that 23,000, we can mark it over here. 23,000 is the next level that we have to look out for in Nifty. It is all based on open interest. See, when you analyze indices, you look at their derivatives data, you look at their futures data, you look at their option data, and based on that, combine it with the candlestick patterns, combine it with the price actions that you have, and that's exactly how you can mark out support and resistance for indices. So Nifty level, we have just talked about it. 23,000 is the level on the lower side that we have to mark. On the higher side, here we can see highest call OI is in 24,000 strike price, 1,30,000 open interest. Already we have marked 24,000 on our chart, so I believe this gives us a good 1,000 point range, 24,000 on the higher end and 23,000 on the lower end. These are the levels for Nifty that we have to look out for next week. Priprataman.
Got it, got it. So, Arjit, like when you're telling mainly about the levels, don't you look at the historic levels as well? Like, for example, if you previously look at Nifty levels, 22,800 was again a strong support in comparison with 23,000 flat. So, what do you think about the historic levels versus the levels that you're currently projecting on the open interest?
Right. I'll just quickly mark 22,800 here on the charts for reference, and I'll mark it in black color. See, the reason why 22, I'm avoiding 22,800 right now because first, it'll create panic for all of the viewers and all of the investors. Even yourself, if you're trading in the markets, if you see, oh my God, next support is at 22,800. Oh God, what will happen next? So, first is that it'll create unnecessary panic. Second, historic levels are important only until they are not breached from that day till today. Now 23,000 आप देखो यहाँ पे 23,000 on the last time we saw a huge gap between 22,800 and this level 23,200. This means there was a gap of around 400 points here. The exact middle point according to option data as well is 23,000, which can act as a support. Historically as well, देखो 23,000 पे there are multiple times that the market has taken support. The reason why we are preferring 23,000 over 22,800 is because 23,000 is the first level जो वो दिन के बाद until that day till today we have not breached or even touched 23,000. So 23,000 is the first level. If 23,000 is broken, the next untouched level is 22,800. So the reason why we are avoiding to say 22,800 out loud right now, it's not that it's not possible, but markets have already fallen a lot. If you just check out the RSI, you can already see that the markets are in the overbought zone. It's below, it's near 20 already. So I believe the markets are already oversold, and at such point, if if we try to create unnecessary panic, people would just get trapped. From here, the right direction for the market would be 23,000 as a support. We might see a short covering in the upcoming days, maybe on Monday or maybe on the expiry date Tuesday. We can see a short covering, a small up move, maybe up till 23,300, 23,400, so that people can get a hope, and people who are trapped already, especially people who went long, people who bought calls already, so such people who are getting trapped, they can get a good exit in the markets right now. So I believe that's how we can go. 22,800 is not off the charts, but yeah, I believe 22,800 is, it's the worst level. We might not see 22,800 in the upcoming days until unless situations become much worse now.
Got it, got it. Ajit, next, can we also look at Bank Nifty chart, especially, want to look at HDFC Bank. From past 5 years, if you see, the returns have been close to, flat from past 5 years.
Right. So Bank Nifty, talk
Bank
about
has
Bank
not
Nifty, you
moved
can
at
again
all
see.
since the five.
Yeah, sorry, go ahead.
No, I was just telling you, like, is there any particular reason why this stock has not moved anything from past 5 years? It has just been in the same range altogether.
Right. So if you look at Bank Nifty, the rally again, the downside move has been quite straight. There's no point, no level where the long buyers or people who went long could exit. So again, I believe the same strategy like on Nifty, we might see a support from 53,000, which is the next support, which I believe on Bank Nifty already 53,500, 53,000. This 500 points might bring a little a relief rally to the people who went long and could not get an exit. Apart from that, Bank Nifty, why it's been falling? Again, the sentiments were negative already. A lot of banks had given good rally in the upcoming weeks, the previous weeks, like right before the war broke out. A lot of banks had already given good rally. Coming to HDFC Bank, see, HDFC Bank, I believe, is entering the league of Kotak Bank. I'll quickly load up the charts of Kotak Bank to show you how Kotak has been moving for the past couple of years. You see, this is a daily time frame chart. See, one candle represents one day's movement. You can see
Mhm.
over the past 3-4 years, Kotak Bank has been stuck in just one range. Why is that? If you just look at the fundamentals, I cannot load it right now, it will take a little time. But on an overview, Kotak Bank has not been doing very great fundamentally. Their net interest margins, their profits, their revenues, it's not bad, but it's not very good either. So that is the exact reason. See why the stocks move. When investors invest in a stock, they expect the company to do wonders. If not wonders, at least do something better than last year. That's something which gives the investors hope, and it drives the stock prices up. Kotak Bank has been doing good, but it has not been meeting the expectations of the investor. That is why the stock has been in a brief range, and उसी range में ही Kotak Bank trade कर रहा है. Same thing for HDFC Bank. HDFC Bank has not been it's not doing any big wonders. One big wonder was on the downside. The wonder was that their loan to deposit ratio was horrible a couple of quarters ago, but now I believe in the last 3-4 quarters they've started improving on those matters and on those perspectives, and now we're seeing a good rally in HDFC Bank already. Why is it falling? The same reason. We saw a very huge vertical rally in HDFC Bank. Short sellers, they could not get an exit, and now it's a time for short sellers to earn good amount of money. We can see a good and short covering here again for all of the long buyers to get an exit. But all in all, this is the exact reason why we are seeing a downfall in Bank Nifty and majority of banking stocks.
Got it. Got it.
One more
Right.
thing.
Right. And Ajit, in fact, yesterday when we were, please, please go ahead.
Yeah, sorry, go ahead. All right. So, uh, in the previous sessions, we've been discussing that apart from the Indian stock market, maybe in the evening session, if you like to trade commodities, you have to focus now on crude and natural gas and all of such commodities which we are running short of. Just to load the chart of natural gas, and if you can just check out natural gas right over here, we can see a huge rally that came up in natural gas, not just on daily time frame. We can see on intraday time frame as well. On 1 hour time frame, we can see a nice consolidation which is happening in natural gas. So I believe from here, natural gas prices on MCX can shoot up again up till 311, or maybe more further if we see this war escalating. Same goes for crude as well. If we see crude oil futures, it's been rallying again. Yesterday, after a session, when we mentioned that people have to focus more on crude and natural gas, we saw a huge rally right after the session went over. We closed the session at around 4:20 yesterday, and before 6 p.m., we had a huge rally in crude oil already. So I believe the message right now again is same. Markets would not do good until unless crude oil prices come down. If you see a constant rally in crude oil, the markets will stay under pressure. The only way you can hedge against this is either you trade crude oil or you follow experts like us on Z Experts, who go ahead every day and tell you about what's wrong, what's right, and which way to trade in the markets every day.
Exactly. I was trying to mention the same thing. Yesterday we discussed about the crude oil and focusing more on crude and natural gas instead of gold and silver. And right after you told, crude oil went up 8.9%. In fact, I've made a post about this as well. So that was one great insight. So which is why it is important for most users to listen to a professional and join their live sessions like this. Now, moving ahead, we can look at the other sectors, main sectors that took hit today.
Sure. Let me just share the index list that we have
Please.
that we can look at. So here's how the entire market did today. As we said in the beginning of the session, it was a bloodbath session. You can see everything is red, nothing is in green. Auto took a huge hit, metals took a huge hit. We can see IT is already underperforming because of the entire AI thing which is going on. Metals are not doing good because again, the Asian countries, they're facing pressure for the metal supply and demand. All of that stuff is going on in the Asian countries, which is again putting a pressure on the metal prices in India. Another reason, I've got one more point, that given that the Strait of Hormuz is now facing a lot of pressure, we can see that the new government which is formed in Iran, they're saying that Strait of Hormuz should remain closed, ships should not be allowed to pass. Now, this is creating not just problem for crude and natural gas. One more sector which might get affected because of all of this is the manufacturing sector. Manufacturing sector means manufacturing of electronics, manufacturing of laptops, mobile phones, fridge. I'd say all of the infotainment systems you have in the vehicles. All of these systems, all of these things will also face shortage. You may ask why? Why? Because see, Strait of Hormuz and all of the Middle East and Gulf nations, they do not just have huge amount of crude oil and natural gas. They also have this chemical which is called sulfur. Sulfur, along with another chemical which is there in the Asian countries, mainly in South Korea, altogether it is used to produce the chips and the semiconductors, but it's also used to cool them down. आपने chip बना दिया, now the chip is used in the laptops. Your laptops also get heated, right? सिर्फ फैन से वो कूल नहीं होता है. There are chemicals which are flowing within those chips which help the entire chip to cool down. Once this happens, until unless we have that chemical to cool down the chip, your chips would again, they would go ahead, heat up, and again would crash your servers. Without those chemicals, you cannot manufacture electronics, you cannot manufacture laptops, mobile phones. So it's not just about crude oil and natural gas. This problem, this crisis is now spreading into manufacturing area and manufacturing sector industry as well. So we have to keep an eye on that. Top sectors that we can look at regarding this is Dixon Tech. We can look at Sigma SGS. Dixon Tech already we can see it's already under pressure. So maybe if there's some relief from the war, we can see a good rally from here. From 10,300, maybe we can touch this high again of 11,037. So I believe these are some sectors, some stocks which we have to pay special attention to in such scenario of war.
Got it, got it. But in fact, today when I went through, some of the pharma stocks were still up. So your analysis on that is still on point.
Absolutely. If
Now
I can
moving
just
ahead,
share
can we
the
have? Please do share the
If I can
chart.
just share the chart of Glenmark once again, we can see already the rally has not yet ended. It is still trading around the levels that we had discussed in our past sessions. We've discussed Glenmark multiple times. I can share one more stock with the viewers here today, which is Dr. Reddy's Laboratories. Now, Dr. Reddy's Laboratory, they do not just do tests, they also manufacture medicines, a couple of medicines which is available to sale in the US and Europe as well. Now, state of a foremost closure would not affect these medicines because these can be shipped not just through waterways, through airways as well. So, Dr. Reddy is another stock which is on our radar. You can see a high of 1334 in the upcoming weeks if everything goes well. Pharma is again, as we mentioned and we've discussed multiple times, it's affected but not negatively and not highly affected. So we can see a good rally in Dr. Reddy as well, along with Glenmark in the upcoming days.
One mistake that retail investors generally make in the market.
One mistake that investors make, okay, let me tell something new for this. So this is what we called as implied volatility. A lot of option buyers, they miss out on IV whenever they trade in options. See, why we're discussing options from past couple of days, because markets are falling. There's absolutely no way you can buy a stock and make money. You can for a couple of stocks that we discuss in this live, and unless you are smart. But most of the people, they like to trade options and make money in a falling market. There are a lot of things that you should cover in options while you go for option buying. Option buying is one of the most riskiest way of making money in option. Option selling is quite easy. You can just see where the fair value gap lies, sell that gap option which is in the highest gap, sell that option, the option premium would decay and you'd make money. But to be able to do this, implied volatility plays a very important role. See, there are two things that we have to keep in mind when we are trading options. Apart from the Greeks that we have, there are two things. One is IV, which is implied volatility. The other one is TV, which is time value. Time value is also called as theta when you talk about Greeks of options. Theta decay is something, as the option prices, as the that particular option, as it comes closer to the expiry, your theta decay starts happening. Theta decay matlab time value is reducing. Time value reduce at the end of the expiry. After expiry, the option is going to become zero, right? So if the option is 100, say for example 100 right now, and after the expiry it's going to become zero. So that 100 to 0 ka rally is your theta decay. Along with theta decay, when you study implied volatility, you understand that how is this option going to perform in the upcoming sessions. If you are far away from expiry, IV will play little to higher role, but on the day of expiry, IV plays a huge role. So it's very important to understand how IV works. if IV is up or down, how is that going to impact your options? It's really important to study all of this along with option chain analysis. If you go through option chain, if you understand which option OI is higher, which option OI is lower, where is the negative OI happening, if you can understand all of this, it's nobody can stop you from making money in options. So one mistake is studying option Greeks as well as understanding IV when you go ahead trading options.
Perfect, perfect, Arjit. Very insightful. In fact, overall, this session was very insightful. We almost summed up all the sectors and Nifty majorly. Since we are closing this week, Monday, let's hope something good happens and we see Nifty and all the stocks recovering as well.
Absolutely. We might see a good short covering in Nifty. So that is why, like I always say, take part in Nifty right now. Last session as well, I said it's a good time to start adding up good quality stocks. So I believe now it's the time to start buying. Weekend, see, weekend pay, there are a lot of volatility that is going to come up. Every weekend, something or the other happens. We know why it happens. We don't want to get deep into it. But yeah, weekend पे volatility is going to be very high. Monday we might see volatility, but since we are already oversold and we are not an active, our country is not an active participant in this war, so our market is just falling because of the cascading effect from the global markets. So on Monday we might see a short covering, we might see a small uptick for all as a relief for all of the long buyers. So yeah, we can see a good up move. Stay tuned, stay invested in the market. This is a good time to add good quality stocks.
Yes, that is important. Always stay invested in the market. And thank you, Arjit, for an insightful session. And thank you, everyone, for tuning in. We'll see you next week. Thank you.